have the right insurance on your investment property? My name is Mathew Owens. Welcome to the Masters of Real Estate YouTube channel. Today, I'm going to talk about having the right insurance on your property, on your investment, so that you don't get screwed and the insurance company pays you when a peril exists. One of the very first properties we ever purchased, I didn't know what I was doing yet and had an insurance agent that was new that didn't know what they were doing either. And they ended up getting me a homeowner's policy instead of a rental policy. And so when there was a peril that existed, then we found out the hard way that we weren't covered. And it ended up costing us over $5,000 on that one insurance claim, all because we weren't covered like we thought we were on that deal. I will go over our biggest blunder at the end of the video as far as what actually happened to us on the insurance side, learning tons of lessons after flipping over 1,000 houses in real estate. So some of the main things to understand is when you are buying a rental policy, you need to make sure that you have or when you're buying a rental property, you need to make sure you have a rental policy in place there so that you are covered for your loss of rent. So if there's a fire on the property, you have to move that tenant out to repair those items, then you are covered there with regard to what your rents are. If you can show that insurance company your lease and you can show them what you are making every single month with regard to your tenant, then they will actually pay your rents for you during that period of time, so that way you're covered that entire time and you don't miss a beat other than your deductible involved on that asset as well. So making sure you have the right policy in place for your rental is key. And if you have a vacancy for an extended period of time, you need to make sure you go get a vacancy policy instead of a renter's policy as well. There are different risks in an insurance company's eyes when a property is vacant versus when it's occupied. Obviously, vandalism and theft and those types of things can be big deals and happen a lot more when you have a vacancy versus when a property is occupied. So making sure you have that right policy there for a rental policy or a vacancy policy is key. In addition to that, when you are buying a property that needs renovation, you need to make sure that you have a builder's risk policy in place. If you don't, and you are vacant and you don't have that builder's risk policy and there's a peril on the property or a fire, you just gave the insurance company an out to not pay you as well. So making sure that you have the right type of policy in place when you're building and doing construction is absolutely key to make sure you have that builder's risk policy. On top of that, you want to make sure that your contractor involved actually has the right types of insurance as well. Workers' comp for their employees as well, getting the right workers' comp and general liability policy for their subcontractors, and having a general liability policy themselves and making sure they are licensed, sometimes on bigger projects, bonded as well to cover you for any issues that may come up there. And if you have a claim during construction, you better bet your insurance company is going to ask you for that issue, or that insurance, that underlying insurance from your contractor. You want to be put as an additional insured on that policy during the construction phase of that to make sure so that their policy kicks in first. If one of their workers gets hurt on the job, you want their general liability policy or their workers' comp policy to kick in first before your insurance is kicked in, because if it doesn't, your insurance company may not pay, or you just gave them an out for not paying. So very, very key to make sure that you have all that buttoned up. In addition to that, one of the biggest mistakes that I see investors making is they go with the cheapest policy they can find, because insurance costs can just add up like crazy. A lot of people think of it as a wasted cost. At the same time, when something happens, it's definitely not wasted. And so making sure you have the right type of coverage is key too, not just the right type of use for that asset. You want to make sure you have the right coverage. So what that means is sometimes you can buy a policy that gives you what's called depreciated value coverage, or you can get full replacement cost coverage for that peril. So if you have a fire on the property and you bought the property 10 years ago and you have a policy that only pays you that depreciated value, they're going to reduce what they think the value of that asset is and your payout, but by the percentage of time that's occurred, and only pay you out a percentage of what your total peril cost is in the first place, which may not cover you for all of the costs. And you may be coming out of pocket much more. It's almost like co-insurance in this case, where you're covering a piece of it for them by buying this other type of insurance, that depreciated value insurance, versus full replacement cost. They have to get the full replacement cost and pay for that item. And you want to make sure that replacement cost coverage includes code upgrades from the city that might have changed over a period of time. You know, if you're grandfathered in on wiring, or you're grandfathered in on current code for the current asset you're buying, make sure your coverage includes upgrading that property to current code, which is what the city is going to require you to do. One more usage change that you need to focus on is a lot of people do short-term rentals right now, and short-term rentals are always excluded in these long-term rental policies, or the vast majority of the time they are. And so you need to make sure you have short-term rental coverage, which covers you for all of your furniture and things like that on the property, as well as a higher value for that loss of rents coverage, because normally short-term rentals rent for a higher amount. And you want to make sure no matter what, your utilities are covered and your rents are covered and your mortgage payment is covered no matter what. So making sure you have that right policy in place for short-term rentals is absolutely key, because you don't want to give the insurance company a reason to not pay you. They are in the business of collecting premiums and trying their hardest not to do payouts. Within reason, there are some really bad insurance companies out there that you really want to avoid, and you want to go with a AAA rated insurance carrier that has a good payment history, that will actually pay you and not beat you up consistently when you do have a claim that occurs. So, and have somebody that actually understands and will pay you, and get a very good insurance agent on your team that will go to bat for you, that will help you compile all the documentation you need when you do have a claim for this. Because if you submit it wrong, then they have a chance to not pay you out on that claim. And it's absolutely key. Your insurance agent is an amazing team member that you should be putting in place to make sure they got your back for those types of items, okay? You also want to watch out for those major exclusions in the property. So like dog bite coverage, like domestic violence coverage. There's a lot of little perils that they purposefully take out, because the insurance companies have had massive amounts of claims in these areas. So they're saying, hey, we're going to mitigate our risk and exclude these primary items here, so that way that you're not covered for those items unless you specifically ask for that exclusion to be taken out of the policy, which will increase your premium amount across the board. We were buying a commercial property one time, a multifamily, where the premium increased by $3,000 to $4,000 just because we wanted dog bite coverage covered across the board. And you want to mitigate some of those things by putting things in your lease, like you can't have aggressive dogs. You can't have trampolines on your property, or raised or pools that are above ground pools, or install those types of things, so that way your tenant doesn't go install those that are usually specifically excluded in the policy, or need a special provision for a pool or something like that to be actually covered. So making sure you fully understand those exclusions is absolutely key to your success, and making sure that your your insurance agent is there for you when you do have a claim is absolutely important. And then, you know, I always err by the side of not filing claims for the small stuff. After flipping over 1,000 of these houses, there are a lot of small stuff. Maybe you have a missing HVAC system or a condenser or something that costs you $3,000 or something when your deductible is $2,500. Filing that insurance claim for that extra $500, normally, if you're doing any kind of volume, is not really worth it, because the more claims you have, the insurance carriers may deny future coverage for you. So eating the small stuff, if you're doing lots of volume, can be, you know, key to keeping a very good insurance company in place that you can rely on, that does a great job for you. Okay. Also, I would say getting umbrella policies in place can be key. Now, you may have a rental portfolio lent to it, all inside of LLCs that have different policies in place with different carriers in place. Normally, your primary homeowner policy for the house you live in is where you're going to get that umbrella policy from. Most insurance companies will not give you an umbrella policy over other insured properties that is insured by somebody else. So if you have a $2 million general liability policy on one of your rentals and you want to get up to 5, normally you're going to have to go with the same insurance company to get that umbrella over everything, so that way you're covered there if you want that umbrella coverage. Now you can go one more level of liability protection and setting yourself up with an LLC and then having the insurance in place. I always recommend a high level of general liability insurance so that you're covered. It very depends on your net worth as well, making sure that attorney fees and things like that could really hurt you are absolutely covered as well. There are some self-insurance strategies. If you're big enough and you have enough premiums going out the door, I swear we pay hundreds of thousands of dollars a year in insurance premiums. And sometimes I think about self-insuring at the same time. You're talking about defending yourself, putting massive reserves aside for this. And it's a matter of what that return on investment looks like with regard to your premiums versus the potential liability associated with, your portfolio as a whole. And, defending yourself in lawsuits, someone dies on a property or gets, disabled on one of your properties, you could have above a $2 million claim that exists if you did something negligent and things like that. So very, very important. You also need to make sure that your property manager is listed as an additional insured on the policy. Your lender is typically listed as a loss payee, meaning they get paid first and then can decide if they want to refund you that money to be able to put back into the property to fix it up. At that point, you want to make sure that they got to be put as loss payees on those policies. And so one of our biggest insurance blunders was actually done by my brother, and I'm calling him out right here. We have so much activity happening that we actually went through and he forgot to pay one of the premiums. And of course, there was about a $20,000 fire on the property. And still remember the property to this day. The street was on Foster Street in Memphis. And we ended up costing us $20,000, all because he forgot that one premium after doing hundreds of these things, which anybody could make a mistake in tracking and doing that kind of stuff. And at the end of the day, I still call him Foster to this day just to make fun of him. And he makes fun of me for my errors, of course, too. And you have to let some of these things slide off your shoulder sometimes in real estate investing, but I still call him out on that. And you got to be really careful that you're tracking correctly, tracking your actual due dates, making sure that you still are insured across the board, especially if you have a big portfolio like we do, so that way you are covered across the board and don't have these types of issues show up. But they can save you massively. We had a tree the size of a sequoia fall on one of our houses, right smack dab in the middle of a house, literally cut the house in half, made the front porch fall. There was 70-mile-per-hour winds out in Tennessee and fell on the house. The tenant was inside the house, luckily in an area that they were not affected. They were okay. They were in the bedroom on the side, and this hit the middle of the house, but could have been a death, could have been a major liability. And the insurance company came to bat for us, gave us a full payout on that asset for the full replacement cost, because it was basically a rebuild at that point. But that's how these insurance companies can save your butt when something major happens across the board. So thank you guys. If you guys like this content, please like, subscribe, hit that notification bell. I really appreciate it. And you'll be informed about all the content we come out with on a consistent basis. And I look forward to talking with you soon, and happy hunting on those real estate deals. Talk to you soon. Bye-bye.